Good afternoon, everyone, and welcome to Radio San and Play Trading on this October 7th, 2021. Let me start off by just giving you a brief disclaimer. I am not a financial advisor. Anything that I say or mention is for educational purposes only. I may or may not hold some of the stocks that I mentioned. Please remember to do your own research before trading any stock or options. Trading stocks and options require lots of risk. So I'm just going to start off real quick with just giving just a brief overview. First off, thank you everyone for joining me today. We do these Twitter spaces with interviews with management so we can kind of get in touch, a little bit of transparency with these companies. So overall, I'm very, very bullish into October 20th, November, December, January. This is the time to make the most money. So because we're looking at times to make the most money, we want to look at good quality companies. And to me, if you look at the RJDG, it's been trading very, very well in the last couple of weeks. And it's a stock that recently broke a downtrend. And I'm going to give you guys the levels right now. So we actually broke a downtrend at 0.011. And we've been trading above that line. Today we kissed it. I don't know who was able to add. I think I got filled. The lowest was 0.0117. And you're trading above that line break. I'm going to post this chart today because we actually closed green. But now the next level of a breakout level is going to be 0.015. So write that target down. If you close above 1.5 on 2 consecutive closes, then your next bet is to potentially test that 0.022 level. There's not much resistance there. So you break above 0.015, and then you have upside to about 0.022. Now, if I look at the weekly chart, you have upside to 2.8. If I go 61.8% extension from 2.8, that's going to lead us somewhere around 4.6. So from the levels here, 0.011, which is an 8 into 21 MA cross on the weekly chart with the MACD going from negative to positive. I'll post these tonight so you know what I'm talking about. You have a floor of 0.01, and then you have master support at 0.011. You have a key break of 1.5, and then it leads you all the way to 2.2 to 2.8. If you close above 28 on 2 consecutive closes, that gives you upside or a balance of probability to about 0.046. Now, is it guaranteed? No, it's not, because we don't trade certainties, we trade probabilities. But the cool thing is the company has just updated, all right? They updated their social media, and now what they did was they redid their website, and their website looks pretty good. All right, let's see if this gentleman is on RJD. Okay, I hear you.
This is Ron Brewer, if you can hear me.
Okay, Ron, we got you. I guess we had a little bit of technical difficulties.
I apologize for all my technical hassles here, but I am here now, sir.
Okay, awesome. First off, I just want to right away update everybody right now. We have Mr. Ron Brewer of RJDG. If you can, just explain your title and a little bit of brief description of your company to our listeners.
Well, I'm Ron Brewer. I'm the CEO. RJD Green is a microcap holding company at this time with a three division business model. The services to the home health industry and to the providers, and particularly the third-party administrators, software that brings cost efficiencies and a better program in certain areas, such as instant payment plans, etc. We have an environmental division, which we also have had a lot of history in, and that is for the green environmental services and technologies. And then we have a specialty construction division where the business model is to collect small market niches that are unattended, and that's been fully launched at this point.
Okay, got it. So one of the things that we want to know right now, COVID-19 is happening. Has it affected your company in adverse or, in fact, being in the healthcare industry? Are you guys still dealing with anything that has to deal with telehealth? Because I know if I call my doctor now, right, it makes it a little bit easier to kind of connect with the doctor via telehealth. Are you guys still in that, or were you guys ever in the telehealth sector?
We are participating in one project at this time that is creating a market software support services for this specific sector that is in regards to cloud storage of data that has much easier access, and it's got the depth of what we can hold and give to them, and also with compliance documentation. As far as COVID has not affected us greatly, except in trying to get acquisition projects completed.
Okay, so what I'm understanding right now, IOSoft is the one who's basically doing the service providing, payment technologies, storing data. Is there anything or involvement with IOSoft? Do they use any blockchain technologies as we're kind of advancing towards storage and having security measures? Are they dealing with anything that deals with blockchain? I know knowing right now blockchain is a very, very important aspect to technologies.
We have taken the stance because of the fact that we have a business model that needs to get further along. We are one of our board advisors is very well tuned in that area. We're watching at this point. Basically, we're watching it closely, but there's a couple of observations for us at the position we're in. For micro caps, it's our opinion that that's a very crowded scene trying to get a seat at the table, and that the major companies are really dominating. The sector's huge, but there's also a lot of volatility. Just giving you our viewpoint, it's a huge opportunity, however, perhaps, but they're also for us as where we are. We're on the sidelines watching and to see if there is a way that that we feel comfortable as a micro cap / becoming a small cap can participate in that. Our software people are very excited about several options in that regard, but we're taking a cautious position at this point in time.
Understood. We noticed that you're revamping your website. We noticed that you're actually being a little bit more transparent with the company from previous years. Is there any reasoning to that? Because I know now a lot of companies, what they're doing is they're actually updating via their social media, via their Twitter. And we actually saw that you posted a tweet recently, and it said the focus of consulting agreement in Belize is to assist with further development of the fast growth of the mega foliage tree. And you mentioned 7 years harvestable with 14 feet growth annually. And you actually put in parentheses, removing CO2. Now, carbon capture is a very, very important aspect of what's going on right now. The market kind of is getting, I guess you could say it's really embracing that green energy. Can you tell us a little bit first about your transition into social media? Will you be using it to update your shareholders as far as somewhat of, I guess, like almost like a step before a press release? And tell us about the website and also this tweet. What does this tweet mean in the sense? Because, you know, some people will not understand what you guys are doing in Belize.
Well, let me start with the social media. The basis of our management is we are managers first. If you look at our as board of directors and officers, our success base is making companies profitable, cleaning up companies and making them profitable. As a small company where there's been a lot to try to get accomplished, we feel we've been remiss and in appropriate communication, not by desire, but just because of the time consumption. It's one of the things that gets secondary. Secondly, with our experience in assisting a lot of small micro cap companies, we've been a little bit conservative about trying to put out news that may be just news that may or may not happen. But we've worked with them from the advice of our SEC attorney in that regard. And we feel that we can do a better job by hiring some professionals that will assist us with putting out appropriate news and keeping people from either would-be investors or shareholder investors a bit more up to date, and trying to get this back and forth. There's a good stream of information that's basically open to public knowledge. If you want me to move into the Belize situation, we have a lot of background in environmental services and green services, and a client that we helped before for creating the reshaping of RJD Green into a holding company and participating, they were a client that we helped in their let's call it their forestry tree product. And what we recently were asked to do is that as they launch a couple of forestry products in Belize, the product has a lot of environmental gains to be made in the fire remediation, which includes, of course, almost anything in soil and underground water, pulling toxic materials from the earth. Much earlier test, probably 6 years ago, they got a lot of good information, and now that they're doing the forestry, we have a tree barker, as they like to call themselves, that we have always retained in an advisory position in some of the environmental situations, such as we've got a technology that can turn the solid waste and the wet waste that can turn that into usable materials. And so we were in Belize to set the stage for completing some studies, some actual trials, to see if we can enhance I'll just call them the environmental results of the process. And everybody's excited about it from our clients' basis, and from our side is with our two experts per se. And but if we as we follow this through and complete the whole process over the next couple of months, and we all get comfortable that we've got results that shows that we can, that there are enhancements to be made and what that impact is, then we have agreed to work continually on that and be in a to be determined profit sharing portion of the process. And the little blue sky of the thing is that this particular company does a lot of overseas basically call it third world country work with governments. And today, if their projects were ready to go and these projects have already had a history, they are very comfortable. They've got 4 to 5 governmental direct approaches in some countries that can use this, because again, arid environments can benefit from this greatly because it takes minimal water. The product itself has fast growth for wood and lumber usage, and what we're trying to do is help them complete some proven environmental. The environmental actual benefits are proven, but to prove what that means, in some specific numbers, is the way I try to break it down into simple language. And that's what we've had our first process with down there, and I think we're due to go back in about 2 months.
Okay, so what I'm understanding right now, you guys are working with a company out of Belize, and you're testing, and if they like what they see, this could lead to a potential contract for several years. Not only that, this can actually start going into other countries that are in need of this. And usually, to my understanding, the governments subsidize this sometimes, and the governments end up paying some of that money that's owed. Correct? Is that how you guys generate funding with this?
Generally, that's correct. The company is actually is a United States-based company, but they had some rich international, let's call it, activities. They chose Belize because, one, there was government support of these two. I'm not sure how big they were, 4,000 or 5,000 acres, but of these tree forestry projects, and Belize has the right temperament for that. Climate-wise, it's obviously very accessible from the United States, and so that's where they wanted to start this. And they have similar relationships in some other small countries that need two things. They needed some economic relief, obviously, and if they can get a forest in a arid country that has all these benefits, they're very interested.
Understood. And from what I'm checking right now, they say that, and listen to this, guys, about 92% of Belize's land area is covered with forest and woodlands. Timber cutting is usually done during the short dry season, and their principal variety of trees is mahogany, pine, cedar, and rosewood. If you guys ever know or go in to look at these type of woods for flooring or anything for the house, they're one of the most expensive woods. And now with higher inflation,
this company's desire was to come with it to develop a product, and this is this Paulownia tree is a hybrid that they have created. That the come on for it, and the real attraction is, in 6 to 8 years, you can have as much as a 55 to 60 foot tree, minimum of about a 48 foot tree that becomes a profit center. And that's why their approach has been not into the hardwoods that will take 30 years to get to that same. In some cases, depending on the type tree, 20 years. But most of the stuff in Belize is a slow growing product. It will give more lineal footage of wood, but it's a 4 or 5 time timeline to do so. The other thing about this, and again, this is not our product, but the other thing about these Paulownia trees is they will regrow from a stump. So you can take your crop, and the tree regenerates itself. Which for me, not being a tree guy, that's some of the things that I found most interesting about this when we helped them initially several years ago.
Right. Understood. So now what we're going to do is we're going to transition about the Silex Holdings. So you talked about commercial projects, construction division. Right now, you're seeing big talks on infrastructure. Will that in any way affect your business model? Knowing that infrastructure is one of the biggest things right now, is that going to help your Silex Holdings specialty?
It won't in direct product, but the fact that there's going to be a big stimulus makes the whole, having been through these before, it will help the whole construction process. At this point in time, the Silex Interior company, the first company that we have purchased and have rebuilt, manufactures and distributes cabinets, all of the stone products that might come out of typically, of course, you think of countertops, but there's a myriad of uses for that. Tile, the related products, sinks, etc., to the commercial projects, to the new home builder projects, and then down to the remodeler and do-it-yourself from storefronts. What we moved the company into about 3 years ago very ardently was what's called the commercial contracting, where you're dealing with general contractors. You're talking about anything from the hospitality to government facilities, hospitals, etc. They all have similar needs. And we were, until then, in this company, like most people in that sector, we were predominantly new home builder construction. My personal background and one of our other fellows has been in construction services, from $70 million ready-mix companies to all sorts of different companies we've had ownership in and participated in. And there's a much different life cycle to commercial projects than home building. Home building, typically, we haven't seen it in many years, but home building usually has much shorter ups and downs, and it's usually tied to interest rates. And it will be cyclical, much greater than the commercial. If a commercial project is funded, unless the economy goes into some serious deep depression, just like maybe 2008, in 2008, those jobs continue on. Also, commercial jobs, for what this company does, are larger and usually the projects are better run because you've got a more professional entity in a commercial contractor versus a home building contractor. And that's why we have, I would like to say just a couple of things more about that for us. Over these 3 years, what we have done, we've created relationships and proven out that we can on time deliver a quality product and complicated architectural projects. And we do that in a 4-state area. We picked quite a few of the significant general contractors in that 4-state region. And by that, we'll be talking about companies that are doing 100 million, 200 million, 50 million minimum of revenues that have a lot of opportunity. What that has led us to is that today, as we go into what's our 2022 fiscal year, we have a basis of about $750,000 in backlog. We have, and not looking at it as a blue sky situation, but actually very realistically, this commercial division for next year, depending on if the economy continues as it is just now, doesn't have to grow if we just stay steady as it is now. It's a wide range, but we'll wind up with 10 to 25% increase in the total revenues of this company, which we're small, but that's still a significant number for growth. That's a very possible, probable, particularly at the lower level of that, at worst, for the next fiscal year. And that will continue to grow because of the fact we're just now getting the large companies that are regularly wanting to try to do business with us. So so we feel that that's a definite, significant process for this Silex Holdings current operation.
Understood. About a year ago, you guys put out a press release, and you guys mentioned one of the biggest home builders, D.R. Horton, and that was, I think, like about September of last year. Are you guys still doing or selling products to D.R. Horton? I think it was out of Oklahoma City. I think out of Oklahoma that you guys were doing that.
Yes, we are. They're one of the large home builders. The way we market home builders is we really our strength has been to pick up the high-end custom home builder because of the amount of product they buy and the expense of the product they buy. And when I say large custom, we're talking about a $2 million project in that range would be small. We're actually supplying maybe as $50,000 to $100,000 worth of product to a $10 million project. However, for your consistency of production, we also try to have 3 to 4 large volume builders that you don't have the same profit center, but they enhance your productivity to where you're staying at 80-90% productivity capabilities. And so D.R. Horton is one of those companies in that regard.
Right. So I just want to, when you guys get a chance, just look up ticker symbol DHI. They're actually one of the top home builders. They're actually trading at 84.29. If you look at their weekly chart, really, really consistent chart, uptrend. They're listed under the Fortune 500 list at ranked 194 right now. So we're saying that they're one of their clients, you're seeing the type of revenues that this small company, as he's saying, is doing. And whenever you're dealing with any small company making these numbers, that's pretty good. How many employees do you guys have? Do you guys have an actual amount of employees, or
We
is
do.
this small base?
No, we do. We do. We try to, if anything to do with construction, you have got to run a lean operation and stay very aggressive into and creating profitability in other ways than selling price. There's always an oversource of whatever you're doing in competitors. So we keep our process lean with staffing. We also keep it at let's call it the management or sales level. And then we do the same thing within our shop and our install. We have currently 21 employees that are production or installation, and we have a 6-person staff of between sales, accounting, and management. Actually, it's 5 right now, but we'll run 5 to 6 people in that area. So all total, you could wind up with about 26 people that are employed.
Awesome. So overall, what we're seeing is they have their feet dipped in quality sectors. You're talking about healthcare. That's number one. Through their holdings company, they also have the Earthlink Environmental Division, which they're right now in Belize. They're looking to potentially get more contracts around other areas. One of the things that we're liking a lot is the Silex Holdings. That's kind of drawing me more because I see the clients that you have right now. Looking at your filings and your quarterly financials, we're seeing 3.8 million in assets, 1.8 million in revenues, and a 3.7 million market cap. Now, this is one of the most important things. I know you mentioned that you might want to uplist, but one of the things that us as shareholders and us as potential investors, we want to know about authorized shares and reverse splits. I don't know if you can answer this, but what I'm seeing is your company is very, very favorable because authorized shares is only 750 million, which that kind of, to me, is a great thing because now you're not subject to massive amounts of dilution. Outstanding shares, 296 million, with, I'm going to say, unrestricted shares around 225 million. About, it says here the float's 104, but it could vary, right? Are you guys planning to do any reverse splits? Is there any issue with convertible debt where you have to potentially raise authorized shares or raise any shares? Is there anything that you can kind of let us or shed some light if you can?
Yeah, I can tell you our attitude about that. Basically, I'll answer the authorized shares. There's no plan to increase authorized shares, and we want to minimize any additional shares that might be issued in the way of the company, unless it is the only place where we don't need capital to operate our company. But what we are working towards is getting equitable structures for acquisition, which we have struggled to do as a pink sheet self-reporting company.
Right.
There may be a time that that the profitability of an acquisition merits stock being part of the transaction. If that were to happen, it would increase the amount of issued and outstanding. However, the way we work that and look at it is that not just the revenue, but the profitability of that company has to merit the stock issuance and the feeling that we will get value out of the stock by doing that. Moving to the reverse split, our experience in helping companies through the years has been that those have limited. We feel that there's very limited times that those actually do much good for anyone. Because you're trying to reverse the stock and say it's going to make it X dollar value. We've just seemed to say, particularly in these small cap, micro cap areas, that generally it winds up hurting the existing shareholders and doesn't do what it needs to do by goal. So we have no plans for reverse split.
Beautiful. Say no more, because I just want to update you guys. This company has not done a reverse split. I'm looking at it right now. They haven't. They are very diligent with their business, and you heard it from him. He said that they value their shareholders. So there's no, you know, they're not even thinking about doing a reverse split. And I like the idea of what you said. So if we're going to do acquisitions, if we're going to do some joint ventures, and there is a need, right, to raise outstanding shares where it's going to bring profitability, then that's something that I know that investors, shareholders would not mind. So far, I like a lot of what you're saying. I'm seeing the growth in the stock. I was mentioning, looking at the stock has been going up since the low 0.003 levels throughout the years. This is a stock that I've been holding and trading and since 2019. That's why I know a lot about the company. I'm very, very happy to have you on, and hopefully we can have you back on. Before I end this conversation, is there anything maybe like a little tidbit that you want to say, maybe something along the works? So you don't have to be specific. You could just say, hey, something may be coming. Give us a time frame if you can. Anything that you want to say before we end this call.
I think I can do two concrete statements that are accurate, that are basically public. One thing real quickly I'd like to add is that usually the other thing you worry about, or I would be, is from your position, is debt and convertible notes. We have no convertible notes left, and the only outside debt we have is $200,000 loan for RJD Green. We have some internal debt where we've used cash flow from Silex, and we treat that as a loan just to track it so that each division, because they're separate corporations, feel like they have some, but there is no real debt except for $200,000 at this time. As far as activity, I'd like to say a couple of things. One is we are hopeful that the auditing process will bring us to the next tier of acquisition funding capabilities. Our biggest problem has been getting acquisition funding that can work within the cash flow of the acquisition and leave enough for the things that are not known when you go into a new acquisition. It's either through stock need or the rate of money. We have struggled to get to where we need to be. Now, with that said, there is particularly one acquisition that we announced before the end of last year. We already have a purchase agreement, actual purchase contract. That is, interesting enough, that is still in place. That particular company does the same business as Silex Holdings, only they are larger. They're about $6 million in revenue, which means we'd be creating a $10 million division, which is kind of a nice basis if you're going to have a division to manage, and it will bring synergies, etc. What caused the delay? We actually had that one funded appropriately, but there was not true GAAP accounting, and there were some holes where they could not substantiate some of the and when you get these private small companies, there's discretionary income, there's normalized EBITDA. Well, those numbers could not be substantiated correctly. We mutually agreed to continue the purchase agreement and let them get their accounting squared away and get a track record with it, which we're now approaching. As we approach this fourth quarter, we are back in trying to get active on that again, and their numbers will be better, and the accounting will be correct, will have credibility. So we feel very good about a project that, crazily enough, we started at the end of last year and are still on. But and then other than that, we have activities going to do some relationship combinations with some other entities such as medical billing companies to go with our payment process in IOSoft. IOSoft now we have created a whole larger cafeteria of services through the software needs to the TPAs, where maybe we can avoid some of that barrier to entry. Now that would be two or three real quickly that what we had to do is we had to recreate IOSoft a bit to get that moving to its full value. We feel we've made some positive steps in that regard. We're also having them do some ongoing software development services for multiple business sectors, just to make sure that we are doing everything we can to get that revenue and profitability up to some of the levels we were expecting.
And what is it, some of those levels? What's the goal? Do you have something in mind?
Yeah, but I hate to get into that because it gets into blue sky, but our whole business model was over a period of 2 years through acquisitions and internal growth to be a $20 million
awesome.
QB company. We have not done that. And so we're still where our focus is. We haven't tried to set a deadline of, end of our 2022 year, we're going to be there, but that's what our actual focus is. And if we can just make sure we're making the right, with the frustration we've had with getting the acquisition growth, if we can just see that we're a solid $10 million plus company, that's a first benchmark. And we have without except one acquisition, we're there on that. Right. We have, for an example, if we can procure manageable funding, environmental service companies are readily available that are in the 6 to 10 million revenue stream. And we're very familiar with that industry, so we're real comfortable if we can get into a funding structure that we can live with on the acquisitions. We'll be able to come up with appropriate acquisitions that through cash flow. And cash flow versus purchase, EBITDA versus purchase price, will have good leveraging.
Understood. Well, I appreciate the time. I really enjoyed this conversation. Looking forward to seeing the growth with the company. I'm actually excited because looking at everything that I'm seeing on the charts, it's basically showing growth in itself. I'm seeing higher lows on the weekly chart. We're seeing beautiful support here at that 0.01 level. And now by you coming on, letting us know that there is no reverse split, no convertible notes, you're looking to acquire and acquisition. People love that whenever they're, looking at a company. I'm excited. So hopefully we can get you back on by the time next time we see you. Looking at the chart, 0.028 breaks. We'll probably be seeing you maybe when the stock is trading up towards 5 cents or 6 cents. So I look forward to seeing the growth. I'm a big fan. I'm glad to be a shareholder.
Thank you very much for the opportunity. We appreciate it.
Thank you. All right, guys. So pretty much, you heard it. RJDG. Acquiring acquisitions, this is what they're working on. They're not going to raise authorized shares. They're not going to raise debt by getting more loans. They don't have loans. You heard it from him. They're working on acquisitions, working towards 20 million in revenues. I like the chart. So write these levels down for you guys, because I know sometimes you guys don't understand these levels. Key 200-day moving average support here is 0.008 right now. Any pullback to that 0.008 is a buy. That's a probability level from that 0.008 to 1.1 level. That's a gift. You have an 8 into 21 MA cross with a MACD cross, negative to positive. Right now, you have bullish divergence, meaning that black line is coming up into that purple line. Okay, the last time this stock did this, the stock went from 0.005 to 0.028. Okay, that's 200% there or more. So what I'm looking at for the stock to do, especially during this hyper bubble rally, plus we can get some more news from this company, is a break above 28. You get a 61.8% extension from that 28. That's 4-6. That's a big, big move. And the way this chart is looking on the weekly is showing growth. And we can see that by what the company is saying. I thank you all for joining me today. I really appreciate it. Priya, if you're still on, thank you very much. Look forward to the next one. Take care, everyone.